The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman. This is the 31st day, it's the last day of August. This is where the monthly candle is very important in all the indices. Thank you to our hosts from earlier on, just great programming, and we try to keep that going all day. And of course, you've got your swimming lesson straight after my show. You've got, let's see, that takes you to 1 o'clock. Steve Rhodes, I believe Dave is away. Then Tom O'Brien's back again for 2 hours. So let's just get to the nitty-gritties. What are we looking at? I wanted to show you this 10-minute E-mini chart to show you that patterns repeat. You see this H pattern? That it's like a lowercase h, or call it a lowercase m formation, breaks the support. Our rule of thumb is that within 3 bars, 2 bars really, but give it 3 sometimes, you want to see a close above that most important left side low, in this case 2168.50, made at 230 yesterday. And we've gone under it, and we went 3 bars, the 4th bar below. That makes that level absolutely key resistance over the period of the next few hours, maybe 2 hours. Let's see what happens. And there should be a rally just for an oversold condition, but the level to watch is a break at 2165 right now. A close under 2164 makes it even harder to get to that level. A snapback now going from 2165 to 2168 says, aha, now we can have a little bit of a reflex bounce. All right, that's enough with that. Here's the E-mini. I've got to have a down arrow. There's a whole bunch of things I'm going to talk about right now. You've got your arch formation. You've got your MAC. This is the E-mini daily. You've got your stochastic down at 46%. Tried to rally yesterday, a little bit today, and still holding okay technically, but the MACD is showing it's expanding. It's not good. It's showing intense selling. But price is the arbiter of a trend. And this particular point, unless the E-mini breaks decisively below the candle of the 2157.50, you could see this rectangle formation continue. Talk about a rectangle formation. We are still in this rectangle formation. I showed it yesterday and the day before, of going since August the 5th. We've been in a trading band that basically says 2160, let's call it 2160, call it 2160. To 2185, 2186. We've just been in that range for a long time. And now we're pulling back in this leg F in the daily, and it says, okay, we're making another arch formation, and you're very close. If you take out these left side supports at 2164.75 and 2164.50, good chance you're going to test the 2157.50 low that was made on the 26th. Okay, enough with that. Now let's get back to the nitty-gritties. Why? Because today doesn't finish the weekly candle, it does finish the monthly candle. And if I look at the monthly candle, leg B with a potential doji candle, meaning we open the month at 2174, and where are we right now? 2165.50. So there's a potential for opening and close really close to the area of entry and exit, making that like a big plus sign. And that plus sign says, call it a doji candle, and at highs, you've got to be careful. Why? Because within 1 bar, that's an entire month, if you do not make a new high, but you take out key support and then take out key moving averages or a trough, in this case, it's first the 9-period moving average of 2079. Hey, that's 100 points. That's 1,000 Dow points. That's tough. If you take that out, the next low is the low of June, which was 1981. All right? So far, the candle, it's so important. We talk candles, but the MACD, 88.17 and 88.33, wow. We are close to just fractionally closing positive in the MACD for the month, but we'll have to wait for the close today. And the stochastic's still at 93% in the monthly chart, 94% in the daily. Let's go to the Dow. I'm going to run these because it's the last day of the month. I want to get this done because it's really, for me, it's very important. A couple of things I want to do live, a couple of changes. See, we have not made leg D to the downside in the daily chart, and I have a sell mode in the daily, nothing in the weekly chart. And the daily from the 18,688 high on the 15th of August is suggesting, based on the technicals, that we should see more time and we will see more price if there's a close by Friday underneath 18,335. Now, a couple of things that we need to look at. We are still above the 9-period moving average in the weekly chart. We've made a peak E already. I have no sell signal yet until there's at least one close. I usually like to wait for two closes below the 9-period moving average. In this case, it'll be around about 18,370 in the Dow. Two closes below that, especially if they're sharp, and especially if it takes out the left side low of 18,247 made the week of the 5th of August. That's a problem. I'm talking all about the downside because it's real simple. On the upside, in the next 2 weeks, if we take out the highs in the Dow and the S&P, that's recycled, and that will be that will squeeze the shorts. Just believe me, we can see a rocket ship to the upside. But you have to have patience. Don't try to anticipate it. Let's just go with the flow. 1, 2, 3. 116.35 down 21 cents in the QQQs. The QQQs right now have held beautifully, but they are starting to make lower highs and lower lows. And the weekly chart is looking outstanding. We also like the others. This is even stronger. 95% in the stochastic, 82% in the monthly stochastic, and it hasn't crossed positive. We're going to be watching because I think that the Nasdaq is going to give us quite a good few clues. Look at the IWM. IWM made a peak C1, C2, very unusual, but it's permissible in the Chapman wave methodology. It's an innovation that I define more and more over the last few years, and it really served us well. We used to have a caller, Peter from somewhere in Colorado, and he always traded currencies. And we were looking at and he always wanted to look at the EUR-USD, the euro-dollar currency pair. And there was a period where they kept making peak C1, and then Park City, thank you, Z. And they just failed to make their D. And I said, I'm calling it a D because C2, just fractionally underneath, when the technicals are fading, can be a formidable indicator to say we're coming down sharper, and we did that. So this IWM. Now, another thing is historically, peak C1, C2 very often does see leg D after a pullback. That's just a funny thing, the way that works. It kind of wants to fulfill that obligation in the Chapman wave. What does that mean before we go to a break? It means you've gone from a lowest trough to a peak A, B, C, D, higher peaks. That's what we look for in the Chapman wave methodology. Real quick, the composite index is down 18 at 5208. Gold right now is down 1311. Silver's down, silver's up 7 cents. That's 18.74. Bonds, where are bonds? The dollar's up 10 cents at 96.16. And we've got the TLT down 18 cents. And bonds we'll do that. Bonds right as we go to the break. Bonds are unch. I couldn't believe it. I saw it, but it says unch. Unch? Yep, that's unch. I'll be right back. Basil Chapman, Tiger Conditions Hour. Be right back, and we're going to go through more of these indices and more of the wheat, corn, etc., commodities.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
We want to do a bunch of things here. I had a question about KRE. I think this is quite important right now. It's the S&P, it's the SPDR S&P Regional Bank ETF. Now, this is very interesting because it's EFG, G/C. So this is in the Chapman Wave methodology, what we're looking at. And in fact, I wanted to talk about this not next, but I'll do it right now because it's on my mind. You know that by the time I do anything else, I'll have forgotten about it. The Chapman Wave instant restart in the monthly chart made the difference because it went to a peak F and then it went to a G, and there is no H. So that can't be a brand new A and fail. So then I checked it out and said, oh, with the instant restart, that's E/A, F/B. Let me just correct that, F/B. And it does get a down arrow because it did pull back sharply with the technicals. But then it's got a gray A underneath it. And then what happens is it goes to a G/C and makes that final D. Remember, I just showed you the chart in the Chapman Wave. What do we look for? We look for Ds. That's what the objective is to get to. And there's the D, and it makes an all-time high. Believe it was an all-time high. Right there, actually, I shouldn't say that because I don't know. No, it's not an all-time high. I knew I had to check it out because of the high that was made in 2006 and 51.12. It actually plunged down to the 1442 level in March of 2009. And then it goes all the way in November of 2015 to 46.33. Pulls back, and this is a brand new gray A because it's underneath the previous high, and a gray beer, not gray beard, but gray B. And now let's see. So this together with the XLF, I need to do them together. Why? It's so important. We know what's coming up Friday. News is coming up Friday of action. I've got a leg E in the XLF. I just want to mention for clarification, we are long. This is the S&P Select Financial SPDR Fund. It's at 24.46, down 8 cents. And it's in E, and the MACD is good. The stochastic is excellent at 85%. But I have a couple of indicators saying that if it was to fall for any reason, could be the Fed, who knows, what we're looking at is the XLF trading in this area, so close to 24.89, which I had as a left side, right side price time match, which is it's still to make at that 25.89 level, but in leg alternate count E in the weekly chart suggests that there could be a pullback, but that whole 24.20 to 23.80 area should be a containment area. I'm going to get to how this all relates to what might happen on Friday in a moment. So everything is ready. You've got the XLF in leg E. The weekly is in leg E. You've got the IWM having made a top, a double top, but not breaking down yet, but the technicals are starting to fail. You've got the QQQ series. It made a peak E. Here I should put a down arrow, but I can't do that unless I have to wait for the close today. Everything about it says it should go lower, but the price is held beautifully. So this is going to lead me right into what happens, I think, Friday, the two either going up or going down, and I'll discuss exactly what I'd be looking for. I've got a down arrow ready in the New York Stock Exchange because the technicals were so bad and it closed so deeply underneath the 9-period moving average. It could recycle higher, but that means that everything needs to turn around late Thursday afternoon into Friday, or at least Friday. There has to be a surprise that says, you know what? Yields are not going to go screaming to the upside. Everything's okay. I just don't see how they can do it with this number of negatives at this particular time. And the trouble is that my weekly charts have got the letters that are very important that would signal a pullback, sharp pullback. But the technicals have held beautifully. Even the New York Stock Exchange. I'm missing one. Yeah, I want you to do the IYT, which is the transports, did beautifully yesterday because the crude oil was pulling back. So the XAL had a very nice session, and today it's giving it back for another peak D. You understand why we are short in the Dow, and we have a short position in a stock that's done very well to the downside, but mostly we are holding our core positions. We have an experimental one that we're trading so far, not that successfully. We'll see what happens. It's not a big deal because it's I've got a very tight stop on a $53 stock, around about a $2.40 stop. That's reasonable. But it was the one that said, if there's any chance for the upside, this one should actually move higher, okay? Now, in this particular instance, we have to go to the VIX index. And let me explain now what I'm looking at. The VIX is rallying today. It hasn't gone to a leg D. And D's are often where it turns around. So what happens if we rally, if we fail in the market going all the way into tomorrow? The VIX index goes above peak C. It goes above $14.93. And it stops just about at the $15, 1567 is the 200-period moving average, very important moving average. And then we are vulnerable to some news on Friday. So my thinking is this. For our position, the short position, I'd rather us pull back today and pull back tomorrow so that if there is a surprise to the upside, we have a huge cushion and we can stay short and just get stopped out for a small loss or whatever it is. But I'm prepared, rather than have a sharp rally and then we're on the cusp and then you gap. I don't want to gap with us in the wrong position. And at this point, I don't think it's the wrong position. I don't think so, because of all the technicals that I just showed you, the weak MACD stochastic and almost all the daily charts. The price is held, but the price is held because we're in a containment area. You've had a little bit of a rotation to the XLF, as we saw. But a lot of sectors are kind of right on the cusp. I'm watching it, and now we have to go to USO, and I haven't checked my emails. I usually get questions about that. EEM is what people want to know about. You see, yesterday I said that if crude oil breaks below a certain level, then this little containment area with the 9-period moving average has lost its relevance, and that we were looking at the pattern that I call the lowercase h pattern right there, and that if we decisively took out the low of 46.42 and 46.45 from the 25th and 24th of August, and it was intraday yesterday, we already gone under it. I said, if we close under it, you've only got 2 days in which to get right back in. Today we've plunged. Crude oil is down $1.40. It's at 44.95. This is not very good action. So as of right at this moment. So this is saying to me that the TLT, we have no choice. Now we're going to go to the TLT. See the TLT, I keep raising this trend line, but it's not really breaking the trend line significantly. It keeps coming back to the 139s. So let's just make it really simple. I'll talk about the TLT because it's the Lehman 20-year Treasury bond fund. The weekly chart has already given a signal. I should have put a down arrow. I wanted to wait a full week. I want to wait until Friday afternoon at 4 o'clock before I do anything. Why? Because this stochastic has a history. And I'll discuss it here. I should actually have a master class on this, but I'll just discuss it here. If the MACD pulls back after a peak D, E, or F, but it doesn't make a very sharp a V-shaped pattern with the fast-moving average, the green, going decisively under the red, like it did there. Look, I'm pointing right there in the daily chart. But instead just flattens out, it could deflate back up very quickly. So that puts crude oil right on the cusp. I've spoken about the fact that I think that there's just a plethora of oil. There is no lacking of oil. I've spoken about it for my subscribers. I've had webinars where I've discussed what I think are the implications for the oil-rich countries and how much they spend. I've shown them the skyscrapers and the huge projects they're building. I think crude oil is under pressure. We'll talk
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. I'm looking at this chart I've got here on the side of my desk between the wall, and it's half the size of what it normally is because I folded it up. It goes back, way back to the 19... whatever. It was the turn of the century between 1800 and 1900. No, it was the chart that I did hand charted. And it reminded me when I saw this, I extended this earlier. I thought I was on air. I thought this chart was on air before my show. And I did this, take it away. years ago, when I did hand charting with ruler and pencil and graph paper, engineer paper, I would see these trend lines that I draw because I had to land with a 15-inch, 16-inch ruler that you with those long. When I did the 500-point smash in 1987, I had to use my 15-inch ruler and glue another sheet together to the downside. But what I always was impressed with, that I could draw a trend line and then forget all about it, and then one day, boom, it would just suddenly hit that trend line. And I learned the importance of keeping a trend line in place. And look at this. I did this earlier on. I thought I did it live. I was so pleased because I did it live because the market was tanking just before 11. And I thought I was doing this live. And I went, okay, let's see what happens if this trend line looks so important with the left side, right side price time match. Okay, if I extend it to the right and bam, look at that. Isn't that amazing? It hit it right there. When you were up here, you never even cared about this. All of a sudden, it's important. It's become even more important because it makes an arch formation and it fails and then goes below 21.64.75. Let's call it 21.64, the low of 11.10. That's going to be very negative if it can't hold that support and then immediately rally. But if it starts to rally from here, now it can tackle that high on the left side in the E-mini 10-minute ESU September contract to the 2170.75 level. I just wanted to point that out because it's just, I love these techniques. All right, now let's get back to our story. I do want to just interrupt for this as well because I had an email last night from Sam. He calls in occasionally. He wasn't able to call in, but he said, I've got a stock, Elite Pharmaceuticals, ELTP, and I looked at it and I checked. I usually look at the chart and I'm busy doing the work, and then I look to see what is it and where is it, but I couldn't count, just looking at the patterns. And I did this and I thought, okay, if this is a buy signal right here and it's trading, let's call that's an A, but it has a little inside A underneath, so that gets an A right there, another A. That makes this B, whereas it would have just been the same A before. So that's important, and it goes to a C. So this is the call that he made. This is the email I got, and it was last night. That's where we were. I'm not going to go to the email because I remember clearly saying, if you've got a core position, because this looks like a biotech stock, then I looked at it and I said, oh my God, it's trading at, it was 0.22, what was the close? 0.2135. That's four decimal places, right? It's an over-the-counter. It's one of those pink slip stocks that we talk about. And what happened is I just took one look and I said, oh, biotech, look at this. Screams from the 0.005 or something. Yeah, 0.05 level. And it screams from December of 2012. And suddenly, somehow, in March of 2014, you're looking at a stock that's at 97 cents. Somebody made some money, right? Okay. So I'm looking at it. My recommendation was, it looks like a biotech. Oh, yeah, it is a biotech stock. That's number one. Number two is, therefore, I can't do anything other than to say it could go towards the gap of 2374 that was made on the 18th of July. I'm going to recommend that if there's any spike in the beginning of the day, if it opens and you're lucky enough that it can pop up, take off at least, I think I said 2/3, a bulk of whatever you have. And then you might want to put it back, and I can't now remember exactly the thing. I think I said somewhere in the now I can't remember. Now I have to go and see what I said. Sam, there we are. Wow, big move. Very difficult to analyze because it is one of those penny stocks. Theoretically, it should go to leg D. Now in leg D, did I say that was a D, A, B, C? I meant to say in leg C. I would take a good part of it off at the open, especially if it gaps up. Then maybe redeploy the cash back if there is a dip to the 0.1920 to 0.1890 area. Let me do it live on the show after it opens. But with these very low price stocks, you have to grab the bulk and then ride the rest. Tough because there must be a story there. The 0.2374 gap is a potential target. Can you remind me again, Wednesday? I will see if I can get it in. By the way, good eye and congrats, Sam. So now we've got it. What would I do? I don't think I'd change a single word except that you're going to, for me, if I've still got some left, I probably would want to exit somewhere around here and see if I can get a whole new batch, if I even want to stay in the game, a little lower down. But this time you cannot go full. You have to go, this is my thinking, you have to go with less than a third. You can just use play money right now to get back in. You've got a fantastic gain. I just wouldn't, I'd avoid it, actually. I'd say, congratulations, let's move on. Like yesterday, we had calling about, he's fantastic, Scott, call about, he did the same thing with Potash. Took a huge gain, he's out, he's done. Now he can think about things, he can enjoy himself a little bit. All right, so that's the story there. Now, I do want to go back to this chart right here. Look, there's the test. Now, did I say that this is a place to be buying? I would not. I want the test. This is most important. I would not do anything. In fact, if you want to play the long side in anything right now, just be really careful. I might recommend tomorrow afternoon some people take some positions. I'm not sure I will. I think it's just worth waiting, actually. We're going to get so much evidence. Now, I want to finish with this, and I want to go back to my story. This is what I'm looking at here. In the Dow analysis I did, based on what I call now the Chapman Wave 5, mixed in with the Elliott Wave 5, if I squeeze this, you'll see how many 5s there have been. And they've just worked beautifully. Look, 5, all the way from this low right here. The low of, what was that, July 27th? Yep, June 27th, that's 1706. Goes peak 1, wave 1, 2, 3, 4, 5. In a sense, that I can't say that's not classic Elliott wave. Yes, it is. But on the way down, 1, 2, 3, 4, 5 is not. That's my own makeup thing. And we did pinpoint that. And then we went 1, 2, 3, 4, 5. Again, not quite classic Elliott wave, but I found now that I've got to call it a Chapman wave because I broke so many Elliott wave rules. So now I've got a mix. What I did in this 120-minute Dow chart is when we came down the other day, I've been showing this every day, though. I spent a lot of, I have to tell you something, the last few days I must have spent more than the entire trading day after the close, during the day after the close and early morning, doing the analysis. It's a very interesting market, and we're at a point now to be wrong with the gap before the opening, either up or down, could really be hazardous to your wealth. And I'm trying my best to try to protect us as much as possible. So I've got my Elliott wave that said, the Chapman wave that said that could be a 5. But technically, if it is pure Elliott wave, we should come smashing down by the first. That is. Hey, what's the first? Is that today? Tomorrow. Tomorrow, Thursday or Friday, towards the Dow 18,247 level, if it's the classic. If it's not, we're going to have a zip to the upside and break above 18,523. And that's the 120-minute chart. I'll follow through a little bit when we get back. Basil Chapman, Tiger Traditions Hour, down 68, down 8 in the S&P. Be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. I got just one quick thing. What was that stock that we were looking at a moment ago? I don't even know if I meant. Yes, Elite Pharmaceutical, ELTP, trading at 0.2010. What I forgot to mention is that it spiraled to the upside and it went to 2449. And now it's trading at 0.2050. Do you realize what that is in percentage terms from the high of the day? Just from yesterday, it's down 4%, but from the high of the day, these things are terribly dangerous, and I certainly hope, Sam, congratulations, Sam, I hope you're out. So now I want to just do a quick refresh. In the XLF, BAC, one of my favorites, unfortunately, we didn't hold on to a position we had a long time ago, not CAB, but BAC. What is CAB? Cabela's, okay. BAC is trading in leg F to the up. Do you understand why I'm a little nervous here? That even in the XLF, I've got leg D. Perfect. Look at that. Left side, right side, price time match. It's 1 week late. Oh, I'm so sorry. Look at that. And I drew this way back when we had it at, what did we have this? $14.99. Oh, all right. So we had it $14.99. Okay. It's not such a big deal. $15.93. I was upset about that. So look at this. BAC, Bank of America, trading at $15.94, down 25 cents. This could have recycled, and we will know tomorrow. We'll know Friday. But it is in a position to say, I could have a bit of a pullback. I've had a fantastic run. Going from $15.94 back to $14.98, not a big deal. Big deal percentage-wise, but hey, in the long-term thing, this is a stock that has every indication that it's fulfilled the Chapman wave, leg, body, neck, head, beak, and now it's got that extra move. And now the new analysis says that if it's able to hold the 14.84 9-period moving average support all the way through September, and at any point, I don't care what day it is, it could be next week, it could be 3 weeks, 4 weeks' time, if it's able to just sneak its head into the 1650s, I would have to say that this is looking really, I mean, the stochastic MACD and the weekly chart are outstanding. But you've got to remember that on the downside, when the daily gets smashed, you will get a sandwich effect, that the daily is going to drag the technicals of the weekly down. In other words, when the weekly is successful, it's usually because the daily is successful. So that's what we've got to be careful of. 95%. Where can you go from there? You can go to 96, maybe 7. But there's a better chance that at some point, if you don't flatten out and make that your home, the 90% plus area, your home, you can quickly drop it under 80%. So yes, I'd be careful. I wouldn't be buying. We do have the XLF. I didn't want to only add on a certain pullback number. That's all I want to do at this particular point. Okay. Now we're doing okay for time. Now let me do this, Mike. A quick question on GE. GE is just, look, the weekly chart looks very much like the TLT. It's just gone to a peak. I should put a down arrow, but it hasn't broken down yet, really. It's just flattened out. And it's flattened out for a month. It's really impressive because it's not going to stay flat for long. So this is almost like a Bollinger Band. When they come together, you've got to be careful. It doesn't tell you how long it'll stay narrow, but boom, it'll suddenly open out. So I wanted to show that G is not giving me only the clue that the upside right now is limited, but so is the downside. That's all it's saying. I mean, is that news to anybody? We've been in one of the narrowest trading ranges in ages. I showed that on the 120-minute E-mini chart. Now let's go to my next Chapman Wave Index Dow Quartet. IBM is pulling back. It's under the 9-period moving average. It's just making lower lows and lower highs. But the stochastic is at a level where it can pop to the upside, but that MACD needs a big trigger to be able to stop flattening out. No, to even start flattening out in the daily. The weekly chart is still holding beautifully, but it has dipped down. So this is another one that's kind of vulnerable to the downside. The big surprise will be at 158.84. If by Wednesday, this coming Wednesday, a week from today, if it's trading above 160, 164. Triple M, my third in my Dow Quartet. Sideways action. Had a fantastic move, like it's just waiting for something. But at 179.20, if it takes out 176.14, the low of the 26th of July, making an arch formation and closes under it, that weekly will go from a sell signal probably quickly to a sell mode. So this is very important, and the monthly chart looks great. My last one is UTX, United Technology. Look, it's already given a daily sell signal, sell mode from 109.83 high. It's trading at 106.76, big deal. 3 points in a $110 stock. But look at the weekly. A doji high at peak E. Stochastics pulling back, but still at 89%. MACD is good. Monthly chart is technically very good on the price, but not so technically good. It's just okay on the monthly MACD and stochastic. So where does that put me? It says that if the Dow, let's make it real simple. I go to the Dow, INDU. If the Dow closes under 18,200 by Friday afternoon or Monday, I would have to say that I immediately get a sell signal in the weekly chart. And that just puts me on notice to say that the upside is now limited, at least for, I've got other things that will give me time. I don't want to even talk about time just yet. But at this particular point, it says September initially could be rough. If on the other hand, even if there is a pullback by Monday, if the market is suddenly rallying and the Dow, instead of being in the 18,200s, you're suddenly looking and say, wait a minute, why is the Dow in this rectangle formation now above the 18,530s? What's going on there? That would be really nice action to say, you know what, we'll have a rotational correction, new leadership. Maybe that's where we have to look at the banks again, etc. I'm worried about the commodities. Look, this soy broke down, looks lousy. Corn. So I'm sorry. Yeah, corn broke down, looks lousy. Wheat, that's wheat. Broke down, looks lousy. I'm a little worried. We did nibble on a commodity index today because I was patient waiting for it to come to us, and today it slipped a little bit further. Not a big deal, but big enough for me to say, you know what, maybe I should have just stepped aside because this is, look at this, the TRCCI. It's got 3 days in which to close above 415.30. And it closed at 415.11. That's the first day on the 29th. Yesterday was second. Today is the third. This is so far not a good sign unless it triggers a brand new buy signal. And the only way you're going to get that is just a fabulous reversal with us at 413, screaming over 417. Gold, I was asked, would I look at gold? Sure. Gold, same thing. You know, I looked at the DZZs. We've traded that very rarely, but we've done. It's in leg D. But it's in leg D with pretty darn good technicals. And if you look at the dollar, there goes that buzzer. Completely forgot about it. In fact, it gave me a surprise here. Leg B hasn't broken out, hasn't broken down. It's in the middle of the range. But I have to tell you, I'm looking at this dollar and I'm saying we've got a lot to go on here. I always say that the Fed or any really big economic news cannot change a trend. I've already got the downtrend in place in the daily. So if we continue down, there's no change in trend. To me, the change in trend will be if it sparks a rally that takes the S&P to new recovery highs within 10 days, and that'll be extremely bullish. But at this point, I really think we need a consolidation. The euro is testing its 1.114. We'll talk about that when I get back. Peak F. I'll be right back straight after these messages.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
I'm just going to cover a bunch of these questions that I had. Just there's very little time. We'll have a little more time tomorrow, but right now, here we go. If you're looking at the question is, would this be Investors Business Daily a flat base forming in GE? Yeah, maybe, but I've done this. I like to look at both sides of the coin. This could be a Chapman wave, propeller shaft, or inverted stork leg formation. If GE takes out 30.50, it's a 31.27. Let's say 30.20, closes on the 30.20. There's a good chance it could have a big pullback to the 29.50 area. Big percentage move, but not a big move in the overall thing with GE having hit 1937 back in August of last year. So it's a spectacular move going from, I would say, 19 to 32. Hey, big move. All right, now let's go back to this. I wanted to do two things. I had a question about BA. BA is falling, and this is breaking down. This is not a good sign in all time frames. The other thing was Chico's. I like to look at Chico's because it's in the clothing area. I haven't done it. No. Oh, look at that sharp move up. Very selective in the retail area, and that's why the retail index I still have as probably a it's continuing low. It's now in C. We were going to short this and we decided we've got other things to do. But I'm watching it real closely, XRT and the RTH. The retail market vectors, and the XRT is the S&P retail, but it's a more select retail, but it's pulling back sharply. Then a question came, a nice question about, because I would have forgotten it, about, let me find it down. Right, there. I did those. So, the question is, IYR. It's very important. The REITs. Look, they've pulled back. They're given a sell signal in the day, sell mode in the daily. It's a sell mode so far. I have to call it a sell mode in the weekly. Monthly is still looking pretty good. Hey, there's a lot weighing on this. So let me do this. I'm going to just leave you with what my planning is, what I'm going to try to do for subscribers. Going into tomorrow's close, we're going to probably see the VIX do some juggling around. People will be using the VIX as an indicator. Larry had said, look, why don't you go out to November and get a buy the put? It's a much better idea. A small amount of money can make you a lot, but keep it as a small amount of money going to make you a lot within your portfolio. Not that it's going to make, don't put your portfolio in there, because if you miss, you're done. Just a small insurance, like an insurance policy. You're not going to buy a $50,000 insurance policy when you're going to get back $60,000. There's no point at all. Just make it very nominal. All right, here we go. GDX. Oh, copper, that's what I want you to do. Look at this pattern. I meant to mention it yesterday. Thank you for reminding me again. I especially wrote it into the den because I knew I was going to forget it. Look at this left side, right side price time match, and we went right there, but we haven't broken down. Copper doesn't look very good, and the stochastic is flat. Flat stochastic is like at the top when it's flat in the 95 area, fantastic. When it's flat at 4% at the bottom, I don't like that. And I think we spoke about that A pattern, the Eiffel Tower. This is almost like an Eiffel Tower. It's more stretched like a cup, an arch formation. Be careful, because if on Friday at 4 o'clock, if crude oil is down sharply, if the TLT is down sharply, yields are up sharply, if the XLF is actually moving to the upside, not the downside, but going to the 24.43 now, but going to the 25.30s, I think we have a change of character in the market. It's going to take a little bit of time for the market to digest that. So keep that in mind. If you want to buy a little bit of insurance, that's fine. We are short, so I don't know if I want to add to the short. I'll make a decision overnight. We'll see. The other thing is the IYT, I mentioned before, the transportation index. If that is sharply lower instead of being higher, then we could be in for a tough time. So I don't mind being long, I don't mind being short, but I now have a very short leash on any new positions. Why? Because we're going to come in for a big surprise Friday, and we want to be ready. I'll be back tomorrow. Thanks for being here. Check out my opening call and have a great day. Stay tuned for some.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.